Thank you, Ellen, and thank you so much for Norfund for inviting myself to come and present what we do. Norfund has been interested in GroFin's business since 10 years back. I've invested with two of our larger African funds, acted as an anchor investor, so we're very thankful for their support. I think today we've heard a lot about the missing middle, the shortage of risk finance for businesses. As Ellen mentioned, I've been an entrepreneur for the last 30 years. I've started a number of businesses across a number of sectors, and I've been, as many other entrepreneurs, pushed away by banks on several occasions. And in the market, you'll always hear from the entrepreneur side, there's no finance available for them. From the banker's side, there's no good deals. So at some point in time, you need to solve this problem, and that's what we've been trying to do for the last 12 years, is finding a solution that's specifically tailored to bring risk finance to startup and growing businesses at the base of the SME pyramid. So GroFin's mission is to develop a sustainable, replicable, and scalable business model to serve the needs of startup and growing businesses. And it was quite important for us to develop a model that can scale, because as we saw from previous presentations, there's a significant need in the market. So we've always worked with the premise that we want to build a business that you can institutionalize, can create a non-bank finance institution that can serve the needs of startup businesses. Now, we're talking about businesses that fit between microfinance and private equity, and businesses that has too high a risk profile to be serviced by banks. These businesses for us is critical because we see that as a means to an end. We want to have an impact in the markets in which we operate. We want to see jobs created, and we want to see that there's verifiable socio-economic impact. Only way you can do that is create sustainable businesses. Now, the challenge is quite big because we know from statistics all over that 50 to 90% of startup businesses do not live past their 5th year. So that's the challenge. How do you take a startup business and make it sustainable, make it formal business so that it can actually have a contribution in its area? When we look at the target market then, that's where GroFin fits in. We're right at the bottom of the SME pyramid. On average, the deal size for the last 700 transactions that we've done is around $300,000. So significantly smaller than private equity, at the same time much bigger than microfinance. So it's enough capital to start a real business, to grow a business that then can employ a number of people. All of these businesses have similar characteristics. They lack collateral, they lack track record, so they can't access bank finance. And in the majority of cases, the entrepreneurs require skills. They don't have the full set of managerial skills to make the business successful. And we focus on those businesses that need between $100,000 and up to a maximum of $1.5 million. If you look at these businesses, then you realize what the challenge is. This is a few statistics from 6,400 businesses that we've engaged with and entrepreneurs we've engaged with over a number of years. And the challenge is, how do you make an informal business a formal business? Because if it's not a formal business, it's very difficult for us to support them. If it's not a formal business, they will not make a contribution at its fullest level into society, because we want them to be a formal business. We want them to pay taxes. We want them to be able to interact with larger corporates, be in their supply chain. So quite a critical part of what needs to be done is not to only give them money. That's probably the easier bit. It's how to help these businesses become proper businesses and support the managerial team or the entrepreneurial team in running these enterprises. So we came up with quite an innovative model 10, 11 years ago, much based on own experience and also experience at that stage in working deeply into Africa with the previous businesses that we had. And we realized that it's critical that you combine the business support with the finance if you want to make these businesses available. And business support in the GroFin model is much more than technical assistance. For us, business support is you have to help develop a transaction, because in 95% of the cases, when an entrepreneur comes to us, they will present to you what they call a business plan, but it's not a business plan. It's largely just an idea. It's not a plan that you can finance. So you have to take time, work with the entrepreneur, enter into a longer-term relationship, and firstly establish, does the entrepreneur have the ability to manage the business that they actually want to grow or establish? Secondly, you have to work with them in understanding the viability of that specific plan. And then very important is understand what is the risks that's involved. Majority of entrepreneurs don't have that full skill set or experience to address viability and address the risks. So our first part of our solution is to bring pre-investment business support to the transaction. Actively work with entrepreneurs typically over a period of 2 to 4 months in assessing their ability, working on a viable plan, and typically 1 out of 10 deals then go forward to a point where we can invest in it. Then we implement the transaction. Now, we've learned over time that you need to be very careful with implementation and quite close to the transaction. Ensure that the money goes into a machine and not into a new car. And so we work very hard with entrepreneurs to actually implement the plan that we agreed beforehand and taking it step by step. Then becomes the difficult part, because for the next 5 years, you need to work very closely with the entrepreneur. Small businesses face significantly more challenges than big business do. And that's the reason why they so easily fail. It's not about entrepreneurs not having the ability. But for small business, if your electricity is cut off, I mean, we have, for instance, currently in Ghana and Nigeria, a situation where on average some of our transactions would not have more than 10 hours of electricity in a week. Try and run a business that way. It's very difficult. If you don't work with them how to overcome those challenges, they just fail. And so the number of challenges goes on and on. So the critical thing for us in our post-investment business support stage is how to help that business, firstly with all the normal things that need to be done. 2 critical things there. One is how to access the market, how to grow their turnover. The other is how to manage their finances. Because there's 2 things that make these businesses fail, is inability to grow turnover and inability to manage their working capital. So those are 2 critical things we work extensively with our entrepreneurs. And then helping the business formalize, bring good governance into it, make sure that the environmental standards are there, help the business to establish itself and grow. The other thing that we realized at a very early stage, and which really worked well for us to date, is understanding that an entrepreneur or wannabe entrepreneur wants to own his business. So if we want to support entrepreneurship and we want to build good entrepreneurs, help develop good entrepreneurs, it doesn't help we go at the level of where we operate, which is rather unsophisticated business, and then try and give equity to these people. They don't want to share their shareholding in their business. So we came up with a model where we make available risk finance, but on the basis of a loan product. So we don't stand in the way of entrepreneurship. We want our people to own 100% of their businesses. At the same time, we take quite a bit of risk in these transactions. So we use a self-liquidating loan instrument, and with that some fees and costs that give us the higher return commensurate with the risk and allow us to do the business support. At the same time, it's a good solution because you have a self-liquidating instrument, and it gives us an opportunity to exit the transactions and for the entrepreneur to fully own his business. So I think those are the 2 critical components. How do you make available both pre-investment business support and post-investment business support, and then an instrument that actually suits the business at each stage of development. And that's been the GroFin model that we've applied to date. I'm going to show you a very short video clip of a typical GroFin investee company. This is one in Rwanda. By chance, it's another healthcare business. We made 2 investments in this company. First one was in 2012. Dr. Sowaf, that you'll see in the video, he set up a little healthcare facility. Business came in because people really need that in Rwanda. Then he ran into difficulties because the medical insurance facilities, they take a long time to pay. So now he's got a little healthcare clinic up, he's got staff, he's got patients, and he's got no cash flow because he's struggling to get the money from the insurance companies in a short time. So our first investment was about $150,000. Worked with him establishing a better working capital structure, worked on a better billing system, and really over a year got to know him as an entrepreneur. Then put in a next investment which was used to build his own healthcare facility, employ more people, and there you can see the numbers. Over a period of 3 years, the annual revenue has increased by more than 200%. Patients have increased more than 200%, and so too the employees. Allow me just a minute to show you a little bit more.
My name is Sowaf Barijoro. I'm a medical doctor. I own this clinic. It is called Ubuzima Polyclinic. I own it and I manage it. So I'm the managing director. Having this business running, I continued to discuss with different banks, but they failed to provide me solutions. Only GroFin till to date gave me satisfying solution to my business. I benefited a lot of things from GroFin. First, I benefited from their experience of managing businesses. You know, they were able to understand my business better than I did at that time. And they showed me different hiccups I could meet while managing my business. And sometimes I had this orientation and they were showing me, if you do this, you may have this problem, and then, but if you do this, you may have this solution. So it's not only about financials, it's also about their skills, their technical skills. And it was, I don't think my business would survive if I didn't meet GroFin at that moment.
So it's really about the business support in the end of the day. If you get that delivered well, then these enterprises can grow. If we look at each transaction that we do on average and the impact of them, then by formalizing that business, putting the necessary risk finance into it, you allow an economic impact in excess of $100 million per year from each of those enterprises in the form of wages and procurement and taxes. We typically have between 20 and 30 people employed per transaction. So stepped up from the microfinance level or the really small business level to an enterprise that now contributes quite a bit to employment. What's really important for us is also ensuring that there's good employment standards within these businesses and also that there's equitable employment. So good to note that 40% of the employees are female, and quite a large section of the employees comes from the bottom of the pyramid, those that earn a much lower amount before that now can go into formal employment. On average, each one of these businesses serve 5,000 base of the pyramid clients. So those businesses are really important to deliver goods and services to the local community. And as James Mwangi said, it's critical that we empower entrepreneurship and that entrepreneurship is there for as a part of community empowerment and ownership within that area. And typically these businesses have between 15 and 25 suppliers that again supply them. So there's a lot of indirect development also happening through developing these businesses. If you look at the impact as a whole to date, as I mentioned before, we've done just over 700 of these transactions across a number of countries. The economic impact through the portfolio is around $2.4 billion to date. Quite important is how many people are sustainably employed in these businesses. 18,000 to date. And we've now created the necessary scale to develop between 120 and 150 enterprises a year. So it took us quite a while to build the necessary capacity, but now things can scale and we can develop more. And we have a target of 30,000 jobs end of next year and 50,000 in 5 years to come. We've benefited a lot from anchor investors like Norfund that saw the potential of the model, really saw the need in the market to develop a new solution for the SMEs at the base of the pyramid, and we've managed to also secure capital from 30 other investors. What's the really heartening to see is that you can turn that 50 to 90% failure rate into more than an 80% success rate. Currently, GroFin sits at an 84% success rate, which we measure as by the time we've been fully repaid, that business is sustainable and it's carrying on and it's growing. So having the right financing package together with the business support can really turn the situation around. We have helped nearly 7,000 entrepreneurs. As I said, we engage quite widely, give pre-investment business support, but only about 1 out of 10 eventually meets our criteria for investment. On average, our portfolio currently reaches about 1.3 million BOP customers. Can you maybe help me just with the next slide there, please? I think we've missed one or two. Thank you. Just a bit of an overview of where we are with the model development. Managed to scale over the last couple of years, now having 14 offices in 13 countries. And the question that we have is, why shouldn't GroFin be in every country? There's a need for such a model of bringing business support and risk finance in every developing country. And we're currently looking at how can we scale this at a faster pace, be it through own organic growth or be it through partnerships. There's a need for this model in every emerging economy. We've got 150 staff on board, 55 of them is investment professionals. And we only hire locally. So that was one of our principal decisions that we took. That is, if you want a model that's replicable and scalable, then you have to use local staff, which you can empower to run with it. So over the last 10 years, we've invested significant resources in building teams in every country where we operate. Hanging on to them is very difficult because we empower people with a skill set that's not available in the market. And so we've also been playing a role in developing skills for the bigger finance industry. People move on from GroFin and go and run other funds. They take up a position in a bank where viability assessment is quite important. So there's more impact than just developing your own staffing. We use our own staff and our own investment managers to make the business support available to the clients. So we took the decision at an early stage that you cannot do the finance transaction separately from making the business support available. Once you have that disconnect, then your chances of success is limited. So we use the same team and skill them in both assessing the viability of the business, structuring the transaction, and then giving them the business support. So on average, every investment manager would have between 8 and 14 clients to whom they give both business support and they assist with the financial transaction. And we've built quite a deep knowledge base within our team around different business support matters. And that allows us to react quite quickly to a client's needs. To date, we've established 10 SME funds, have benefited from nearly $500 million in capital committed to those funds through the investor base. Critical for us was to make sure that if you want to build something of scale, you have to build an institutional system. James Mwangi said that's precisely what they did in Equity Bank as well. You cannot scale something if you're not focused on building an institution, putting proper systems in place. And that took quite some time, especially as it's a new model. A lot of it's learning by doing, benefiting from the lessons learned. Some leave more blood than others, but it's been really an exercise of continuously learning and applying those lessons and building an institution that can serve the needs of the sector. Where we are now, I think we've got enough proof to show that the missing middle, especially the businesses at the base of the SME pyramid, is indeed an opportunity. We always knew it's a development opportunity, but it's also a business opportunity. Our funds, in nearly all cases, the local currency returns in the local portfolios is double-digit numbers. So if you work with these entrepreneurs, you can put good transactions together, you can get repaid. So there's a definite business opportunity as well. We follow commercial principles in servicing a market segment that used to be only looked at from a development perspective. And I think that's important because that's drawn in significantly more capital from a wide range of sources over the last couple of years. And then for us, the one answer that we need to get to, is this sustainable? And for sustainability, we need to both have verifiable socio-economic impact and then growing financial returns. And that's been shown over the last couple of years. Thank you very much for your time. Norfund, thank you again for inviting us and for your support to date.